Good morning for this Friday, August 16th, and the first chart we're looking at here is gold, the ETF GLD. If you recall, on yesterday's video, I was calling for the market to move much higher, and the market actually took off yesterday and took out the level that I said was definitely going to be tested and broken, and it was tested and broken. Look at yesterday, just took off, catching up to silver's move, which made a bigger move, quicker rather. Look at that gap on silver, broke up big time to right in here where gold at the time wasn't quite to that prior high, and so gold moved up and took out that level. Let's draw a little bigger fib number from, come up with some potential resistance area. What I'm going to do is I'm going to measure from January's high, right back in here, take my fib tool, put it on the high, drag it down to the low that we saw just on what we bottomed out on, what, June 28th. June 28th on the ETF, 114.68. We're already up to, it's going to open up, well, past 132. So I'm going to take this white horizontal line and I'm going to put it right here, which represents the 38.2% retracement of this big down move right here. So we're getting close to that level right now. That level is right now at about 134. So the market still has some room to move to the upside. I'll tell you this, so if the market's able to pull back, now remember, I sold some puts earlier on in the week, and they're going to expire today worthless. Made some money there. Obviously, I'd much prefer to be net long this market, but I was waiting for a little bigger pullback. You know, when I saw the market resisting here at the 50 exponential moving average, I was actually waiting for some type of price pattern in here somewhere. Even if it occurred right in here, I would have been long this market, but I didn't get it. I didn't want to buy it automatically as it pulled back, even though, as you can see, measuring from this low here to this high, the market came back to the 38.2% retracement and bounced up beautifully. Again, I was waiting for some type of price pattern in here, so instead of actually buying net long the market, I sold some puts down near that 50% retracement. And so today it expires. They both expire, about two different strikes, both expiring today, which will make money, but the market did run up like I thought it would. So what I'm doing is I'm measuring the fib retracement from this low up to this high, and then I also want to measure from this pivot low here to the high here. And I would definitely be looking for a pullback, and I'll let you know when I'm looking to go net long gold. But gold has successfully broken through that 50 exponential big time. So I continue, you know, we should see some type of resistance here at about 134 on the ETF. Okay, let's flip quick to TBT. TBT, as you recall, opened up big time yesterday. Was not able to fill that gap. Yesterday, closed near the high at $80.26. Actually, folks, this is a 2-year high in interest rates. Okay, we're at 2-year highs in interest rates. So that's big, okay? Again, look at what happened when we got this gap just 3-4 days ago. We ran up quite a bit, okay? Now we've got this gap. Okay, so what I'm going to look to do, I'm going to look to even, I got a lot of puts on this one. I've got two that expire in September, one that expires today, but I would be looking to go net long by measuring. Now I know I've measured from this low before. Those are big pullbacks, right? So I'm going to take that off. I'm going to go smaller here. I'm gonna measure from this low to high, and then I'm gonna go and take it from this pivot low here to this high. And so what I'm doing here is I'm looking at two sets of fibs. So again, from this low here to this high, and obviously if the market makes a higher high, then I would redraw those fibs. But I've got two sets. The 38.2 of this bigger swing is right here. And then I measured from this low to high, and then the 61.8 is sitting right on it. So 76.90 to 77 right in here, that's a good number. That's a number I would actually be looking to buy this market net long. So again, this is a market that I've wanted to be long for a long, long time. I've had numerous trades in the last year and a half to the long side. Made money on pretty much all of them, but again, this is the move that I've been looking for. That has taken a lot longer than I thought. But again, like I've said, about a year ago, that this is a long-term trade, thinking that ultimately interest rates will normalize and go much higher. But so we're just going to trade this, and this is this is broken out again above two-year highs in the TBT. So we'll see where this can go. And if you're currently long this market, you definitely would want to be utilizing a trailing stop. And I would suggest using either a 2 or 3 ATR, average true range, and average that ATR out. Either use 21 or 50-day average ATR, and then use that and subtract it down from the highest high. Or not the highest high, but the highest close. Okay? So for example, yesterday closed right at 80.26. Let's say you're taking a 3 ATR of the last 50 days, take that number and subtract it down from 80.26. And not until the market closes higher than 80.26 would you then recalculate from the new close with the new ATR average range. That's how I would play this. But again, I own a lot of puts on this market. They're all making money. One of those expires today. One of those trades expires today, and the other two expire on September 20th. One's actually for the strike on that is 76, and the other one is 72. Okay, so hope that helps. Have a profitable day, and let's see, is there anything else? Look at Apple. Apple above 500, right? Yes, again, yesterday 504.25. Yesterday closed at 497.91. I've got a put trade that expires today. The market's just opening up at about 497. Look at 500 and 500. So it's 500 right now. I've got a put that expires today with the strike being 480. So if the market were to close below 480, I'd be net long Apple. All right, have a great day, and I'll talk to you on Monday. Bye for now.